Welcome to You and the Law. I'm Steve Cilente.
And I'm Bob Lally.
Bob, insurance. You deal with insurance a lot. I rarely do. I have insurance, but I'll be real honest with you. I actually read a policy once, and I thought, this is great insurance, but at the very, very back, there was this big, long thing talking about exclusions. At that point, I realized that it would take forever for me to figure out whether or not the insurance I had was adequate. What is insurance really?
Well, that's a good question, because you purchase insurance for, protection of your assets and so forth. It's basically to insure yourself against losses that you may incur because of liability you may incur. And the question becomes, is it covered? Is it something within the policy that's covered? And with all the exclusions we have today, quite frankly, some of the answers is, I don't know. But the main thing is read the policy, read the policy, read the policy, and then you have to look and see how it applies to the certain set of facts. We have a different set of exclusions, but the one I kind of want to talk about today is homeowners insurance or renters, because that can cover us in so many different areas, yet it cannot cover us in so many different areas.
Now, I know that as a homeowner, I've got a homeowner's policy, and there are some, I believe, that are for replacement value, whatever it's going to cost to replace what you had, and others, they're essentially on the value of the home as it is today. And if it costs more to rebuild it, that's your problem. So the different kinds of homeowners policies, isn't that correct?
Absolutely, and it depends on the language in the policy, and a lot of times if it's replacement policy, it's going to be written in the policy, and you may pay more for that. You may pay more for that. We'll get into discussing some, but I kind of want to throw out there what an exclusion may be. For example, one time I had a camera stolen out of the trunk of my car, and it was locked. Now, if that had been in the passenger's compartment or the trunk was on, it would have been not excluded. It would have been covered. But just because of the way the policy was written and interpreted, it was not excluded because it was locked in the trunk.
Well, I know that, for instance, I've got a truck camper. If it's parked at home, it's covered under the homeowner's policy and excluded from the vehicle policy because it's not on the vehicle. But if I put it on my truck, it's now covered by the truck policy and excluded from the home because it's not parked there.
Let me give you a real bizarre situation on that. Let's say you had a member of your household that was a minor, and that minor was, when I say minor, a child, that child was roller skating or something, and she goes into the street, or a car comes onto the property and hits her. Guess what? It's not going to be the homeowner's policy. It's going to be, and the other car doesn't have insurance, it's going to be your underinsured motorist coverage, your uninsured motorist coverage that covers it.
Because it's not covered in your homeowners.
Right. It's arising out of the use of a vehicle. Not your vehicle, but somebody else's vehicle is an uninsured vehicle.
Something tells me that the bottom line of this whole discussion will be, you better have a good relationship with your insurance agent and get them to explain exactly what is covered and propose various scenarios so they can give you an answer.
Absolutely. The other thing is you want to make sure what is your exposure? What are your activities, your sports? Is it something that's going to lend itself to liability? Do you ride horses? Are you possibly going to run over somebody with a horse at some point? But, the typical ones I see are 100 and 300. I see 500, a million. I see balloon policies. But in order to have the balloon policies, I'm not an insurance agent, but I just know from personal experience that you have to have at least 500. So.
Now, sometimes called umbrella policies.
Yes, exactly.
I know a lot of professionals, they'll have insurance and also whether it's their house, their cars, whatever, but they'll also have an umbrella policy in the event that their underlying policy isn't enough. The umbrella will go up to even higher limits, and I think they probably start at about $1 million. They're pretty inexpensive.
Yeah. They are. They're not too bad, and you usually have to pay for them for the whole year. I've seen them. They start about 500. Typical ones 500 to $1 million.
Now, one time we talked about dogs.
Oh yeah, I remember that.
All right, dogs are a unique situation, aren't they, when it comes to homeowners policies?
Absolutely. Read the policy, read the policy, read the policy. With all the publicity we've had and all the instances about dogs and the typical dog, I don't want to say the kind of conduct we can expect for certain breeds, because we all know that it might be the individual dog, and there's a big debate about that. But the insurance companies have taken the position, hey, we want to limit our liability. Guess what an exclusion is all about, folks? It's about the insurance company not paying, limiting their liability. So, pit bulls, Rottweilers, Mastiffs, anything that has Doberman Pinscher. I mean, you go down the list, if they think it has potential, they're going to exclude it. And that means if your dog bites somebody and you get one of these breeds there and you haven't checked your policy, guess what? You're not covered.
We talked about these exclusions, and I said you need to talk to your agent, have a good rapport with them. But when I say that also, you need to understand whether you're dealing with a car dealer, dealing with anybody that writes up a contract, and an insurance policy is a contract.
It's a contract, yes.
The agent, irrespective of whether it's insurance or otherwise, generally what they say is not binding on the company.
Correct.
What's in writing is what's binding. So if an insurance agent says, oh yeah, this will cover absolutely anything, earthquakes, floods, you name it, you're covered. If it's not in that policy written, it's not covered. Isn't
That's
that right?
called salesmanship, I think, isn't it?
Bad salesmanship, yes.
Yeah. Representations.
But it's what's in writing that counts.
Absolutely. It's the contract. And I mean, the minute as attorneys we get civil cases, we look at the first thing we want to see is what's in that policy. I mean, I was dealing with one case where we're looking at, there's an issue, several lawyers have been looking at this, but they're talking about it all over California, but the case is whether the use of the word any individual and the use of the word any is ambiguous, and whether that should apply to an individual if it says any. I mean, it gets very specific.
That is precisely why you work with insurance issues and I don't, because I don't want to get in those discussions. All right, we're talking about exclusions. We know that dogs can be excluded. How about having a renter in your home, or if you're in one of these areas that's earthquake or flood area?
Well, I want to make a brief remark about renters. If you're a landlord or something, do you have insurance to cover the property? You probably should, but if you don't, does your renter have insurance? And do they have an animal a dog that may be excluded as one of these breeds? And pretty much if it's a creative lawyer, they're going to be able to find a way for the landlords to have knowledge that that dog is there. And it's hard for me in certain situations. Most of the time we're able to establish that. Sometimes we're not, but if you're a landlord,
You better have your own policy.
you better have your own policy, but you better know whether that there's an excluded animal on your property or not.
Can a landlord require a renter to have renter's insurance and provide proof of it?
I would think so.
I think the answer is yes.
Yeah,
I'm not.
I don't see, it's a matter of contract. It's a matter of what you're agreeing to.
Okay. What about the other issues that I mentioned? The area you live in, does it have areas like earthquakes or floods that could be excluded by the insurance company?
Absolutely. We live in California, for example. We all know we've seen, the earthquakes in San Francisco, and up here we have major faults. Earthquake is generally not covered. It's generally excluded. You need to buy earthquake insurance, and particularly if you're in a zone. Let's take water and flood insurance. Flood is a general exclusion in most policies. Now, I'm not saying it is in everybody's specific policy. I'm saying you should take your policy out and you should read your policy and make your own determination.
If you live in an area that's been designated as a flood plain, whether it's 20-year, 50-year, 100-year, that may be a clue. Now, the issue is whether or not, and I don't know the answer, as to whether or not if you live in a floodplain, do you even qualify for it? Doesn't the federal government have a program for flood insurance?
They do. If you're in a floodplain, there is mandatory flood insurance things provided by the federal government. I forgot the name of it, but yes, it's supposed to be covered, and it is available to you. Now, you don't have to accept it, but it should be there and available to you. So you should know, find out if you're in a designated floodplain and how old that is.
Somewhere reaching way back into law school, there were things that were called acts of God, things that can just happen. Big snowstorm, your roof collapses, meteorite comes through your roof, whatever. Are those generally included or excluded in insurance policy?
Well, maybe we could talk about earth movement. Earth movement is a very big exclusion you see in most policies. And again, I want people to understand, I'm not saying that all these are going to apply to every policy out there, but what I'm trying to stress is that you need to take your policy out and read the policy, read the policy, read the policy. But for example, here's some typical language. We do not cover losses caused by earth movement, including but not limited to, which is what? It's pretty broad. Earthquake, volcanic eruption, mudslide, mud flow, earth sinking, earth rising or shifting. I mean, go ahead. I can see the look on your face.
As I hear you say those words, and I recognize them from insurance policies, it seems like anything that some lawyer can think about of earth rising, earth sinking, earth shifting, that they decide, we better put this in here too. Or as often happens, there's a lawsuit and they forgot to put earth sinking, so the insurance company gets stuck. So now the next time they write a policy, they're going to put in earth sinking. Now, we don't have a lot of, let me rephrase that. We have actually had sinkholes in Calaveras County. That just happened up at the ball field not too long ago. So
but if
it can happen.
Right, but if it's excluded, you got a house sitting up there and it specifically excludes it. Now, I'm going to talk about something called ensuing causes, but you want me to talk about that?
Go right ahead.
An ensuing cause, let's say, an example of this is, let's say fire is covered. Let's say the sinkhole moves the house and causes a fire. That the sinkhole causing the house to move is an ensuing cause causing the fire, which is covered. So now you do have coverage on the fire because it's not generally the sinkhole, it's ensuing. But these are clauses in the insurance, and it's spelled out whether there's going to be an ensuing clause which will allow coverage.
It reminds me, in law school we studied a case called Paul's graph, where you had a chain of events that occurred that resulted in injury to the plaintiff. So if you go back far enough in the chain of events, as you've just talked about, something may be covered.
Correct.
Even though there appears to be an exclusion.
Correct. You have to look in, now you may have ensuing causes where both causes, or maybe three causes, are all excluded. Now you don't have coverage. So if
your house, for instance, burned down because there was an electrical surge and it caused your power surge to the house, it caught fire, and it was because a transformer 2 blocks away blew up and sent the surge, it may or may not be covered. the fire.
It may or may not, depending on the language of the policy. Read the policy, read
Right.
the policy.
Okay. So if it was lightning, maybe yes, maybe no. But it really, as painful as they are, you've got to read that policy.
Absolutely.
Now what about your neighbor is storing explosives on their property, okay, and something happens and it damages your house? Is it your policy that you've got to look at?
Well, that's an interesting thing. Let me give you a hypothetical here. We're talking really about the effective third-party negligence, and we can get into defects which are known and not known, but I'm not going to go there right now. I'll try. But the effective third-party negligence, say poor workmanship or something in that area, generally we're seeing exclusions in that. Now, you brought up an interesting thing about dynamite on there. Now, let's say your neighbor is doing the blasting, and it may cause cracks in your house. That may be covered in the language of the policy, but if it's somebody doing work on your property as an independent contractor, and the person you brought on the property is using the dynamite to cause cracks, maybe a whole different situation.
So it may or may not be, and if your neighbor's caused the problem, it's really not what's in your policy. It most likely be what's in their policy.
Right. I mean, it gets down to looking at policies and saying force of error going against the structure and things of that nature. So, it might not be the dynamite that might be excluded, but the force of error might be covered. And if it's not caused by a third party that's doing work on your house, it may be covered.
In vehicles, we have underinsured motorists, uninsured motorists, that's the other people. In a house, is there a homeowner's policy that your neighbor's underinsured or somebody else is underinsured or uninsured that causes damage?
Basically, you're asking me if there's underinsurance situation in a homeowner's type situation. Okay.
Right, and it's really not because you did anything wrong. The neighbor blew up his house and blew on the side of your house.
No.
If you know.
Yeah, no, and I can tell you the public policy behind that. The idea of that and getting, having people insured and insured is on the road, and there's California legislature has been trying to have people have mandatory insurance so that there's coverage, and the idea is to protect yourself. But in the homeowners, there's not that.
You're talking about, that's cars.
That's cars. But in the homeowners, that same genre hasn't developed in the same manner as, with the mobility and the driving and the dangerous cars and things like that, and the danger of moving and, driving a motor vehicle. So the short answer is no.
Right. The situation that comes to mind, and what I said explosive, you mentioned dynamite. Unknown to you, neighbor next door is cooking meth, methamphetamine. Dangerous chemicals, they are very explosive, and they do something wrong and blow your house to smithereens. Thank God you're not home, but it's their activity, illegal activity, that causes damage to your house.
You need to look at the policy, read the policy, because it may very well say that the criminal acts of a third party are not covered.
Okay, so you need to make sure. And
Correct.
maybe that's where the umbrella would kick in. I don't know.
Yeah, it's a very good question.
I'm very fortunate. I know my insurance agent's home phone. I even know his mother.
Well,
I call her mom too because she's my mother. So
if you get in a situation where you want to know if you're covered or not, of course you have your insurance agent to help you, but you really need to have access to the policy. And you need to be able to read that policy and make your own determination. And if it gets sticky, maybe go see a lawyer.
And the unfortunate thing is that every time, usually there's a renewal, you get a whole new policy. You cannot assume that the policy you just received, same agent, is the same policy that you had last year.
Don't assume anything when it comes to insurance policies, because they can be changed. You need to read them, and when they renew them, they can change the terms and conditions.
Now, if there was a specific situation that was unique to your house, and I can't think of any offhand, would it be important to tell your insurance agent that, oh, by the way, let me try this, there's a great big oak tree that's overhanging my house. If it falls, am I covered? That would be a good question to ask your insurance agent. And if it's not, If it's an excluded item, would you not ask them, can I get additional coverage?
Right, right, exactly. Another very good example is generally like jewelry, for example, is only limited up to about $500 in property. And if you're going to have it, you're going to want to ask your agent about getting a rider to be able to cover that.
What is a rider?
A rider is just basically an addition and an addendum to the contract where you're going to include something more and get a little higher coverage, but you're going to pay a little more for it. Sometimes not much, but sometimes it's really worth it to protect your assets.
A lot of people, I think, make the assumption that when you ask for riders, ask for an umbrella, that it's going to be very, very expensive. I know that looking at cars, which I'm more familiar with, that getting the difference between minimum coverage to twice that amount really is pretty small. And for instance, I have comprehensive on all my vehicles, even though they may be paid for. I don't have to recompensate the bank, but rather than drop it to minimum, I keep full comprehensive. So if I do something, crash my vehicle, it's going to at least, I'm going to get something out of it.
Right.
But the cost really wasn't that expensive, but too many people today do the absolute minimum, which usually insures the other person and not yourself.
Yes. I mean, it's off the subject of homeowners, but I think it's very important to people understand if you're running around and have only the minimum amount of coverage and somebody clobbers you, excuse the language, but that's what I refer to it as, and you get severely injured, you're going to be limited to that person's $15,000 policy. Now, if you have your own policy of $100, $300, or even $500, and you can't work for the rest of your life, you can take that first 15. Your company will get a credit for it, and you're going to be able to collect $500 or whatever insurance you have, but they'll get a credit for that first 15.
That just went over my head.
I'm sorry. Okay. In other words, if you have underinsured motorists with, you have a lot of people driving around with 15, 30 policies.
Right.
So that basically means that one person, one incident, they're going to get 15,000, and they're going to, if you get injured, you're going to be limited at that. You can go to your insurance agent saying, Mr. Insurance Agent, I'd like to protect myself more. You need to ask for, and they need to offer it to you. You have to actually decline it in writing. But it's underinsured coverage and uninsured coverage, which is basically the same, which means I want to protect myself over and above that 15 in case I get hurt, and I want to insure myself against somebody driving with a 15 policy. I don't want to take that risk. Right. So you would have a policy, your personal policy, of say up to 500. What would happen is you'd get the first 15 you get, the company gets a credit for, and then you turn around and actually have a adverse relationship with your company to collect the difference.
Okay. Now, with homeowners, we don't obviously have 15, 30, 30, 60, or any of those numbers. It's completely different. And they just essentially, whatever the loss is, they evaluate it, but they have deductibles as well on homes, correct?
Oh, yes. I mean, we have deductibles on everything, but sometimes we do have 100, 300, 100 per incident, 300 per group occurrence or things like that. But yes. So, I mean, there's always deductibles because that's how they determine the rates.
Okay. A lot of times in talking to homeowners, one of the problems that we see is there's actually a construction or a defective materials issue. Are those generally covered under the homeowner's policy?
Generally not. And it becomes an issue. Again, I say generally not. I don't want anybody to think that it's not. You have to, again, look at the policy. But if it's something that you could, latent means not be able to see, it may be covered. There's a latent versus, if you can observe it versus whether you can observe it. There's a big distinction in the law there.
It would seem to me that if you bought a brand new home or had a home just now constructed, you might want to get a policy regarding defects. They're certainly during the first few years, because that's when they're generally going to surface.
And there's a public policy behind that. and it's just like the cars, they're trying to spread the risk, and they're saying, well, we don't want to put that much burden on the insurance companies. We got somebody that's actually doing something here. Let's make sure they do it properly, so let's have the contractor have some responsibility here.
This is one of the reasons why the state requires licensed contractors to be bonded and insured, correct?
Absolutely, absolutely.
So it's not really a homeowner's issue. It could become, but there you're looking at the contractor's insurance. But if you're using somebody who is unlicensed,
You're out of luck, and you're probably going to be out of luck on your policy, too.
so if you can't go to your policy, you can't go to the other person, it's going to come out of your pocket.
You got it.
So that $100 a year may cost you thousands of dollars now.
That's right.
Okay. Well, there's some good stuff here. Obviously,
listening.
I'm learning something about insurance, and I do rely on my brother, who's my agent, to keep me on track, and he does a very good job because insurance is really an in-depth issue, and I don't know that we understand it. Everybody understands it. We've talked about inherent dangers with explosives, defects. What about things such as deterioration, inherent, latent? We talked about wear and tear.
Exactly, and this I'm going to speak about very generally. Generally, deterioration, normal wear and tear on the house, that's not going to be covered. And whether something is really a question of fact of whether it deteriorates over a long period of time. For example, water coming suddenly on the property from an outside third party's actions, or whether it comes suddenly. But yes, deterioration, normal wear and tear generally are not going to be covered, but you have to look at your policy, you have to look at your sets of facts. But if that versus sudden damage to your house, there's more of a likelihood that it may be covered. But you have to look at the policy and the facts.
Well, I can think that we can probably think of 100 different situations, whether it's a pipe breaks, the earth shifts, like old mine shaft around here, very possible. A creek decides it's going to come through your backyard now, where you never had a creek before. There's just a myriad of things. And there is no policy that will cover absolutely everything, is there?
No. One real quick exclusion that I want to talk about we're seeing in policies now is electronic damage or computer hacking into your computer.
Actually, my brother just sent me an email about a policy that's available through his insurance company for ID theft. And it's, I think, like $25 a year, which is fairly inexpensive. And there's a limit, I think up to 20, 50,000, I don't remember what it was. But ID theft, electronic, hacking into your computers, destroying them, whatever, that's becoming more commonplace.
Oh yeah, and you can suffer serious losses as a result of it, and it may very well not be covered in your policy.
So if you've got concern about ID theft, check with your agent.
Correct.
And I do hear radio ads regarding getting ID insurance.
Right, we're seeing more and more insurance offered for different things out there now as a result of these homeowners exclusions that are popping up.
I can imagine that this is going to be a very big area of law in the future as electronics become very important in our lives with computer-controlled everything from refrigerators, yes, even toilets. They're putting computer chips in that all types of insurance doesn't start and stop at the car or the house, but then you may want to look at the individual items in your home, whether it's jewelry, firearms, or electronic devices. Is that correct?
Or the type of conduct involved. We don't have time today, but would like to talk about it later. Intentional conduct is basically excluded, but that's a whole other thing.
All right. Thank you for joining us today on You and the Law.